Our next guest says the partnership this big will need a significant amount of power, computing power and electric power. Actually, it could be good, he says, for the Bitcoin mining industry. Brett Knoblauch is head of digital asset research at Cantor Fitzgerald. Hope I got that name right, Brett. So just before I dive into the Bitcoin angle here, what is the power need that you foresee? Because we're hearing reports that to power something that could have 1 million GPUs, do you have to get nuclear involved? Does Texas have the capability for that?
The issue with nuclear over the short term, it takes a while, right? There's a couple companies out there that I don't cover that are maybe 10 years out, but you've seen what Microsoft is doing with 3 Mile Island. Even that's 5 years out. This project is going to spend $500 billion over the next 5 years. You're not going to get nuclear before that. So the question is, where do you get the power that you're going to spend $500 billion on? If you kind of run the math on AI data centers, it's $12 million a megawatt of just CapEx to build it. And that doesn't include the GPUs, which is, looking at Blackwell today, somewhere around $30 million a megawatt. So $500,000, you're going to need anywhere from 12 to 14 gigawatts. And that's the crux of the issue, right? You can spend all this money on GPUs, but if you look at the data center industry in the US, it's only 21 gigawatts, and that's what's been built over 25 years. And of those 21 gigawatts of data center capacity, the power density on those racks is maybe less than 20 kilowatts.
Okay.
And that's the crux of the issue is Blackwells need 60 kilowatts, if not more. So you can't use legacy data centers. So all that power you can't use. So you need 12 to 14 gigawatts of new power. And that's where the miners come in, right?
Exactly. And I'm curious if you can kind of rattle off a bunch of publicly traded names, whether they're the miners or elsewhere in your coverage space you see moving today or potentially being direct beneficiaries.
Yeah, I think if you look at this project, they want power at scale. And that's what the miners have done very well, is connect to the grid. One is Riot. Riot has a gigawatt site in Corsicana. It's about an hour from Dallas. Starboard recently took a stake, wanting them to push into AI. They came out yesterday, said, we're going to stop our Bitcoin mining development and evaluate this opportunity. And that's one that we really like off the back of it, is because we don't think any AI optionality is priced into those shares. And then if you look at Iron, another Texas-based miner, they have a 1.4 gigawatt site going to be energized in April of next year. That is arguably going to be the biggest site, single site from a pure power perspective. And when you're looking at this project, like where they can get the power, those are 2 areas where they can get the power. And from the mining perspective, it's very advantageous for them to go in this market, because institutional investors, what they're going to pay for a Bitcoin mining business on a profit multiple basis versus a data center REIT type of multiple is night and day difference.